All right, traders, it is time to prepare to trade the best setups at the best prices so we can consistently make money within the stock market. Tomorrow, the market's going to be closing early at 1 p.m. With that being said, let's get straight into the analysis. This is going to show you our key levels where we're interested in buying call and put options to make money on the way up and also on the way down. Let's get straight into it. We're also going to be going over and covering some current market trends within this market to be aware of. So in terms of the SPY has retested those 52-week highs. And on that 52-week high retest, it has failed to break out and it has failed to turn it into a floor, into a support level. So the bears are trying to step in for the short term and they are trying to set a bull trap and they are trying to fake out the SPY. With that being said, in terms of overall price action right now, you can see heading into extended hours of Friday, the SPY did have a nice little drop here, a nice little gap down. It's currently at 442.81. So this is what you need to understand. We're going to have a gap to fill at 443.28, and there is major resistance on the SPY at 443.28 to $444 resistance zone, right? So we're going to have a gap to fill at 443.28 tomorrow, and we are going to be looking to see how it reacts at that gap as we are currently towards the higher side of the channel. Now, let's start off with a bearish thesis, right? So let's say it reacts as a resistance. We're getting a strong bearish confirmation on the 30-minute, chart, a nice red 30-minute candle, safest way to play puts in this current bullish market. So if it does end up reacting bearish towards that key level, how big of a drop are we looking at? So you have to study the past, and you could see in terms of the past history, it quickly ended up dropping to about $440.30 to $440.70. So in between that zone is where we would start to drop. Now, in terms of where some nice bounces were triggered, we had some nice, very, very nice short-term bounces triggered for scalpers at 440. I want you to take a look at this level, because SPY has been bouncing at key support, and if it does flip bearish for the micro here, you have a lot of support at 430, a lot of support at 440.30, 440.30. See how it keeps bouncing off the level, right? So I want you to take a look at this now. Look in the pre-market. There was a resistance level right here at that same level, that 430 level. And as soon as SPY broke above that resistance, it triggered a very, very nice bear trap where the bears got trapped and it rocketed back up towards the 52-week highs. So here are the likely outcomes in terms of the dip buying opportunities. If you're looking for dip buying opportunities, more oversold levels, this would be our highest level to consider. You do have some nice bottom wick support right here at 442. SPY has been bouncing off the overall level. But look, man, focus on the oversold levels. There was some very nice traps created at both of these levels. So it's likely going to have a small bounce at these levels initially. $440.30. This is that previous key support level, and you could see when SPY broke above it, it reacted as a very nice breakout. So if they're going to drop it back down to $440, that'd be a key level to buy the dip. Now, what would be one of our best levels to buy the dip on the SPY? So in terms of the best levels on the SPY to consider buying the dip, right here, this is very, very key. Take a look at this level. This is a very nice level, and this is what we'd love to see. This is strong previous resistance at 438. Once the SPY broke above and gapped above 438, it retested those 52-week highs. So if it does drop back down to 438 and close this gap, it should bounce and should react to support. That would be our best level for calls heading into this week, right? Because this is strong previous resistance. SPY had a massive breakout above it. So if it drops back down, then it should react to support and it should bounce, just as it should at $440.30 for a nice micro bounce. But if we're talking best levels and oversold levels, in the key strategy with this one, which makes it better, would be the gap close reversal. This is a previous resistance level. SPY broke above the resistance. It had a massive breakout. It had a massive overreaction to the upside. We're talking about a 6-point move. So if it drops right back down, it's likely going to bounce and reverse at the gap. And the gap is waiting to fill directly at that previous resistance level, which makes this whole idea of buying the previous resistance to react to support an even better idea, because the gap close reversal strategy is very, very real. And we have a gap to fill at 438.11. That's where they're going to try to reverse it for the gap reversal, right? So that's another key strategy. And we combined it with the chart, trading what we see based off a previous resistance level where we buy the dip after SPY has a massive breakout and has a massive overreaction to the upside. We wait for it to drop back down to the previous resistance level, the previous top of the channel, which is right here. And then we buy the dip, and you can combine that with an even better strategy. This is called trend stacking and stacking strategies in your favor. If there's a gap to fill at that previous resistance level, it's likely going to bounce. So that, in a sense, is how we came up with those key levels for calls. Now, in terms of puts and just understanding puts, if we do react bearish at 443.28, then puts are going to be a good idea. The max pain on those puts are going to be above the 52-week highs or slightly at the 52-week highs. And what you need to understand is, so now let's discuss bullish theory. If this does go super bullish somehow, some way, for the short term being, right? If that does happen, where are we going to go? What are the next levels? What would be the next levels where the SPY does go to? So in terms of the next levels, if 444 breaks out and reacts as a support level, you see a floor forming, it breaks out, reacts as a support level. The next level that the SPY would go to would be right here. This would be our next level. Take a look at this chart. The chart says if it breaks above 444, the next resistance level is right here, 445.75. This is a nice, strong resistance wick that triggered a nice short-term micro bull trap, right? So we could see a pullback at 445.72. Now, what would be your best over level possible to try puts if the SPY went super bullish? The best level possible would be this level right here. And the reason why I say that is it had such a major crash and such a strong rejection from this key level of $450. And if it can't top there, then it should top towards 400 and 51 to 453. But overall, look, man, $450 would be one of the best levels for puts possible if SPY continued to go super bullish. So I want you to set price alerts at all of these levels that I've given you, and I want you to trade what you see with these key levels and analysis on the chart, because within time, some of these levels are going to trigger. And it is our job at these key levels to determine if SPY is reacting bullish or if it's reacting bearish. In hindsight, we're going to be a little bit more short biased on the higher levels because we don't like buying calls high, and we're going to be a little bit more long biased on the lower levels because we like buying calls low, right? And that's what we do. We focus on the overbought and oversold side, but we're going to trade what we see. If we're seeing confirmations that it's bullish at a higher level, we're not going to buy puts. And we might sit out on calls because it's just too high for our liking, even though if we trade what we see and it looks bullish, it would likely work out. And then same thing for puts. If it's not reacting bearish at our key levels, right, then we're not going to be doing the puts. It's trading what you see, not blindly trading the level or blindly trading an analysis, right? So those are my current thoughts on the overall market, and those are the best levels that I believe to be trading at. So again, my best levels heading into the short term of this week, $445.75, $450, $443.28, and $440.30 and $438. Those are all of our key levels. This is going to be a bonus level, and what you need to understand is this. SPY has a gap to fill at 438. In order to fill that gap, it needs to crack below 441. If it cracks below 441 and they maintain a resistance level, it's going to try to go super bearish to fill the gap, and then when it fills the gap, it's going to try to reverse. But even if this does crack 441, we should see some sort of bounce at 440. If not, then we definitely should be seeing a bounce at 438. So that's how I overall look at the market, and that's how I plan to trade it in advance, right? So we're just trying to get a better understanding heading into the pre-market at market open if SPY is reacting bearish, because we are sitting towards some 52-week highs. So it's a 52-week high retest. It's attempting to react bearish. It is our job to determine if it's reacting bullish or bearish at that level. If it's reacting bearish, we can try puts with a max pain of 444. If we get stopped out, we'll be eyeing 445.75 and we'll be eyeing 450. If it reacts, if it, right? And then in terms of bullish reactions, we're looking for bullish reactions at the lower levels, 440.25 and 438, right? So those are the key levels. And just understand, if one of our key levels reacts bullish, then it's going to go to the next level. If one of the key levels reacts bearish, then it's going to go to the next level. And in terms of the overall ladder that we're looking at, 450, 445.75, $444, $443 the gap, 442 support, 440 support, 438 support. Those are all the key ladders. Each price ladder is not created equally. Some of them are going to have bigger moves. Notice how there's bigger brackets within that ladder that I've broken down. So be aware of that, because that's where people are going to get absolutely screwed if they're on the wrong side of the trade, right? So you must be aware of that, where SPY can have bigger moves and bigger trend reversals, right? So that's our game plan. And the main levels that I'm interested in trading heading into tomorrow are going to be 443.25, 438, 440, 445.75. Those would be the main levels that I'm truly interested in. I'm keeping an eye on 442 as well, right? For someone who's been doing extremely well, buying the dips for the past 2 weeks in the market, barely doing any put options at all. I just don't like buying so high. But if I'm getting a bullish 30-minute confirmation at 442, 440, 438, then I'll definitely be interested in doing that. Now, in terms of some pattern recognition to bring aware of, even when SPY was going bearish from 444 all the way down to 432, the dips were banking, man. It was mainly just crashing from gapping down, man. So just understand, in terms of the overall trend, SPY has been pushing higher, and even when it went bearish for the short term, the dips were banking. There was great dip buying opportunities. So just go back and reflect on the past week's videos that I posted, because it's going to show you the patterns on the 30-minute chart that we're using to make money buying the dips. And we were doing that successfully as SPY was consistently overall going down. We were doing very, very well. And then it worked even better on the way up. But it was phenomenal, man. So just pay attention to that overall 30-minute trend, because what's been making the most money as of lately is that 30-minute green bullish candle towards our key levels, key support levels, right? Now just understand, trends do change and markets do change within time, but that's what's been working best for me for the next week, for the past 2 weeks. So I'm just going to continue to focus on that until it's just not working out and I'm getting stopped out, I'm taking more losses, and then I'll learn to adapt and get back to focusing more on puts, right? But it's just also having that understanding in advance that we're not at attractive levels for calls, but that doesn't mean that you buy puts blindly, and you should look for call opportunities if dip buyings are working, and then you get stopped down. If it just stops working, then it's called a reset. You just take a reset, focus on the new trends, and focus on adapting, right? If you've been following this channel, I was very focused on puts, and I understand how to make money trading against the overall trend, and I was doing well on puts, but it took me some time, and I learned to adapt on the call side because the market was shifting very, very super bullish, and then I made a lot more money on the call side, and it's a lot less low risk, low reward, right? So you just have to focus on that and trade what you see and learn to adapt. But in terms of some of the patterns that I'll quickly go over, and again, I encourage you to watch back the past 6 videos that I posted, but just some patterns that I'm going to be bringing awareness to. SPY has been spiking at all of the wicks. Every single 30-minute bottom wick it has been spiking from. So wherever the bears have been getting trapped, when it goes back down to the bottom of that 30-minute wick, it tends to spike. So like right here, 442, this is where the bears got trapped, a nice bottom bullish wick on the 30-minute. When it drops back down, it tends to spike. So that's another thing I want you to keep note of. Now, in terms of where are those wicks right now? There is a wick at 442, but it already worked out. That's the problem, so it's not as good now. You could say there's a wick towards 437 and right here towards 436.50. I like playing the levels that were never retested. So right here, it was special because it was the first time it retested the bottom, right? That's another key to our levels is we like trading the first time or the retest, and then that's about it. Once the level's already played out, we're less likely to trade it unless there's strong confirmation. It's a lot easier to win the battle if you can see who's going to win it before you actually enter the trade. And that's what we're doing with this whole situation on 438 dip buying, 440 dip buying, 450 puts, right? That's what we're doing in advance. We're understanding the most likely outcome of who's going to actually win this battle. So other things to keep in mind in terms of 30-minute dip buying opportunities. In terms of patterns, I'm just going to point out some patterns. I want you to look for patterns like these. So this is a bearish trend reversal candlestick, and then SPY sells off, it forms this big red candle. Then after that, it goes bullish when it hits a key support. So when this 30-minute big red candle closes red, then you could buy calls after that. And it did the same thing right here. SPY forms this 30-minute bearish doji, then has a big sell for 30 minutes, and then it forms a super green bullish 30-minute candle. So you buy calls right after this 30-minute candle closes, or like a couple minutes before it closes, right? So those are some other things. Also, look for sideways reversals. I've been seeing a lot of sideways reversals where the SPY will downtrend sideways for about 1 hour to 1 hour 30 minutes max. But just to show you some examples in terms of what I'm looking at, it's like a sideways bearish downtrend, and then it reverses bullish. This is what it looks like right here. It's like an upside down V. This is another one, upside down V. I hit this twice this week. 2 bullish green candles to the upside, and then 2 bearish red candles to the downside. It's like an upside down V, and you can see it's slanted. It's slanted twice in the red side, and it's forming a wick. It's forming a wick. If you're seeing slanted wicks like that, and then it closes 30-minute red on the second one, right? So an hour after dropping, it's likely going to reverse and bounce. And SPY did that. So look at this pattern. It did it again this week. It looks a little bit different, but you can see it's the same pattern. You had 2 bullish slanted to the upside, then you had 2 bearish slanted to the downside, slanted bearish wicks, trend reversal candles, and then it skyrockets. So pay attention to that one. That one came twice throughout the past 4 days. We hit that bullish reversal very, very nicely. And you could just see, man, the amount of times that that's been working is truly phenomenal. Even right here, there was like some slanted 30-minute candles, trend reversal, and then it hits the bottom of the wick, goes bullish. You can even say it happened, 3 times this week, and this was the one I recommended people to buy. I told them at 12 p.m. it's likely going to reverse super bullish to get in calls, because it's going to retest the bottom of this wick, plus it's downtrending for an hour straight, slanted with these trend reversal like bearish candles. It's going to try to reverse at the bottom of this. That's another one where I led and pointed the right direction, right? So just be wary of those patterns. And then in terms of being bearish, just understand the safest way to be bearish in the current market condition is to wait for levels that have not been tested yet that are major resistance, which would be 445.75 and 450. Now, if it decides it wants to double top at these 52-week highs and you want to take advantage of a bearish trend, look for some sort of like bearish 30-minute red candle at major resistance, whether that's 443, 444. Look for some strong bearish dojis. See, notice how it drops next 30 minutes whenever it forms like a doji, like a bearish trend reversal candlestick on the red, then it goes lower within time. You have a bearish trend reversal here, then it goes lower within time. You have a bearish trend reversal here, then it goes lower in the time. You have a bearish trend reversal here, then it goes lower in time. You have bearish trend reversals here, then it goes lower in time. Bearish trend reversal here, it goes lower in time. Bearish trend reversal here, lower in time, right? You go back, bearish trend reversal here, it goes lower in time. You get the point, man. Look for that at key levels. And again, I love doing this on levels that have not been tested yet. That's what I love doing, right? But if it's at a great level that has already been tested, you can consider it by all means, but just make sure you're always preparing yourself in advance, because in terms of key levels, they truly do work phenomenal when you're trading levels that have not been tested yet, because people don't prepare themselves for this. People aren't preparing to buy call options at 438. They're not looking at this and saying, wow, 438 was major resistance. It's probably going to crack. Let's buy some puts because SPY's downtrending. That's how most people think. They don't think it's going to reverse because they don't understand 438 used to be resistance. SPY had a massive break above that resistance. Even if SPY is bearish and it cracks, the most likely outcome is that it has a small bounce first before continuing to go bearish, right? When it hits 438, and then sometimes it just goes super bullish. It will flip trend reversal to super bullish, right? And then in terms of some other recognitions with 30-minute charts, it's just visually understanding, man, if you're seeing nothing but green bullish 30-minute green candles, there's absolutely no reason to be in put options no matter what your thesis or strategy or indicators are telling you. There truly is no reason for puts. You have to wait for something to flip red at a key level, and ideally a key level that has not been tested, right? So don't get trapped in puts with the green bullish uptrends. Don't get trapped in calls with the red bearish downtrends. There's specific patterns that I will use to profit on calls into these 30-minute red candles. I'm buying calls when the third, like right here, as soon as this 30-minute candlestick closed red, I bought calls and it flipped bullish. I knew that because I saw that it was doing the same thing. It's like the 30-minute chart has to look and appear a certain way at specific levels to reverse. That's what you need to understand. So if you see it the wrong way, you can then get trapped in calls, because keep in mind, I've been buying my call options for the most part when the 30-minute actually closes red, because I've been identifying reversal opportunities like I've showed you with the I showed you the patterns. I explained it to you. I'm buying those when that 30-minute candlestick closes red for the reversal. But I'm very meticulous on how those 30-minute candles and patterns close, how they look, how the patterns look. I'm very meticulous on that, right? So be wary of that. So those are some tips and those are some tricks that I wanted to share with you. With that being said, that's going to be our overall plans heading into this week. So it is going to be our job and responsibility to determine if SPY is reacting bullish or bearish at those levels. I encourage you to wait for 30-minute candlesticks to close as well. With that being said, I'm going to be wrapping up this lesson. If you do want to be a part and join Trader Society, it's going to be the first link down below in the description. Now is the best time to join the program. It is a one-time fee. It is lifetime access. And we have people who are getting results, man. The amount of testimonials and direct messages that we've gotten from people who've made thousands of dollars within their first 1 to 2 weeks of the program is truly insane, man. And we are consistently making money within the overall market. The results in the polls are speaking for themselves, man. The vast majority of the team every single day is literally going green, and it's so consistent, and we're leading the overall right direction, and we're also exposing you to levels where it's likely going to have trend reversals as well. So we're capturing the trend, and then we're showing you where the trends can be reversed, and we're also giving you levels where if you were to fight the trend, this is where it's likely gonna have a short-term reversal as well, not an overall reversal. We're going to point you in the overall right direction. If you're looking to surround yourself by the right team, Trader Society, if you want to learn how to trade options, you want to learn how to master stocks, you want to learn how to master the SPY, if you want to learn the best price action trading strategies, this is going to be the best place for you, man, because I'm telling you, what we have in this group truly is special, and we have plenty of moderators who are delivering and getting other people results every single day. It's not just me, man. Everyone has their own unique trading strategy, and they're going to pass that ability to you. So it's the first link down below in the description. You get lifetime access to the chat room, the Discord server, the voice channels, the live streams. You get lifetime access to the video lesson library, the courses, the online education, which will teach you the trading strategies. It'll also teach you risk management, position sizing, psychology, mindset training. If you want to be a part of it, it's the first link down below in the description. You also get lifetime access to all of my real-time day trade and swing trade alerts. You get access to my real-time live commentary and watch list, my confirmations. I am in that chat 24/7, delivering value and delivering the accurate analysis. If you want to be a part of it, it is the first link down below in the description. I will see you guys tomorrow live at Market Open. Let's absolutely crush it.